NetJets. First quarter, 16 million on NetJets. And let's see what else we got here very, very quickly. We won't get into the dividend business. Balance sheet continues to reflect significant liquidity. Our consolidated stockholders' equity as of March 1st was 251.5 billion. That's an increase of 1.3 billion. Our net earnings in Q1 of 2015 were $5.2 billion. As of March 31st, cash and investment, insurance, and other business, excuse me, excluding investments in J.H. Heinz Holdings, were at 58.2 billion and 155.9 billion, approximately 4 billion in cash on hand. Quite a bit of moolah there. In the first quarter of 2015, Berkshire Hathaway's parent company issued 3 billion euros in senior unsecured notes, consisting of 750 million there. The board has authorized Berkshire, to repurchase Class A, Class B common stock priced at no higher than 20% premium over the book value, and that's the equivalent of below 20 million. Railroads, utilities, that's the BSS and BHE, maintain very high investment capital assets. They are, in fact, the first quarter aggregated capital expenditures of these businesses were approximately 2.6 billion, including 1.4 billion by the BHE and 1.2 billion there. Forecast aggregated capital expenditures approximately 9.4 billion for the remainder of 2015. BFS issued 1.5 billion debt shares, consisting of 500 million of the 3% debt share. Anyway, they'll leave him with his rail instruments there. The financial and products there are approximately at 32.9 billion. Financial and finance and financial products liability at 17.5 billion there. And I'll put a link up to that. In 2010, Dodd-Frank Wall Street Reform Consumers Act was signed into law. The act reshaped financial regulations in the U.S., and virtually all major areas of the act have been subject to extensive rulemaking, no doubt about that. Contractual obligations, we are party to contacts associated with ongoing and financing activities here, and it's into his report, their report. The parent company, various subsidiaries, future payment of principal and interest related to borrowing are summarized as falling in millions of dollars. 40 million in 2015-16 there. Won't go very much into that. Forward-looking statement investments are investors are cautioned that certain statements may contain in the document. And he goes on to legal proceedings and various other things, and it's signed by the vice president of there. So that is Berkshire Hathaway, part of our cast. Now let's go do some numbers here and get on with it. We will first go to the Michigan report here. This is the spending outlook remains favorable for 2015, and we'll give some numbers here. On April 15th, the index was at 95.9. And let me just read the summary here from Michigan. Consumer optimism rose in April to its second highest since 2007, only below the January 2015 index. Moreover, the sentiment index has recorded a higher average level during the past 5 months than any time since 2004, although recent gains in jobs and income have prompted the most favorable personal expenditures in 8 years. Consumer assessments of their financial situations are still far below the peak records of the decade. Consumer optimism has become increasingly dependent on persistent low inflation and low interest rates, as well as slowly improving prospects for jobs and income. Despite a slower pace in the first quarter, personal consumption spending is expected to post a 3% gain there. And home selling boom, house buying, since most house buyers must sell their current home. It's a significant improvement in house selling conditions in April have been a critical influence there amongst all consumers. 58% report favorable home selling conditions, highest percentage since 2006, before the Depression. Consumer Sentiment Index was at 95.9 in April, so a survey up from 93 in March and significantly above last April at 84.1. The current condition index at 107 in April, up from 105 in March, well above the 2008 sentiment. expectation rose slightly to 88.8 in March, but a substantial gain from last March at 74. So this is from the University. The survey is a rotating panel based on national representative samples of households there, and in the minimum monthly change requirement for significance at the 95% level there. This is from Dr. Curtin here. He's the chief economist there. Nearly 2/3 of all consumers anticipate rising interest rates during the year ahead of they nonetheless expect very minimal increases for a successful Fed policy. Consumers must judge whether the negative impact of higher interest rates will be easily offset by positive impact of expanding jobs and income. The trade-off accompanies rate hikes in the past, but has never been undertaken when interest rates have been so low for so long, along with other changes in the consumer evaluations that are occurring. Consumers are likely to have to become more responsive to much smaller changes in interest rates than in the past. And we agree with Dr. Curtin on that. The Fed, given the current status of data, has decided that they will nonetheless not do any changes in interest rate in the near future. That is, in our perspective, set more to Q3 and perhaps Q4 of this year. So we are way out there. Let's go to the Institute of Supply Management here. It's a report on business in April of 2015. We haven't done their materials in a while. New orders and production growth, employment and inventories, contrasting supplies delivered slower. Economic activity in the manufacturing sector expanded in April for the 28th month, and overall economic growth for the 31st month. The April PMI from them, this is Supply Management Institute, 51.5%, the same reading as in March. New orders index registered 53.5%, an increase of 1.7 percentage points from the reading of 1.8 in March. The production index registered 56, 2.2% above the March reading of 53%. The employment index registered 48%, 1.7% below the March reading of 50%, reflecting a contrasting in employment levels from March. Inventories of raw materials registered at 49.5%, a decrease of 2% from the March reading of 51%. The price index registered 40.5%, a 1.5% percentage points above the March reading of 39%, including raw materials, for the sixth consecutive month, while the March and April PMIs were equal but registering 51.5%. 15 of the 18 manufacturing industries reported in April, while 10 industries reported growth in March. Of the 18 industries reporting growth, non-metallic mineral products, plastics, rubber products, wood products, painting and related supported activities, fabricated metals, food and beverage and tobacco products, paper products, miscellaneous manufacturing, machine equipment, textile, electrical equipment, appliances, component, chemicals, and primary metals. Two industries reporting contraction, apparel, leather and applied products, computer and electronic products. What a responder saying, lower energy cost continues to help the bottom line. The automotive industry is still very strong. Business holdings relatively flat in North America, softening a bit globally. Foreign exchange is reducing revenue, but volume has remained constant. That's chemical products. International shipping is still being delayed by strikes at ports on the West Coast. That's computer equipment there. Business conditions are good with slow rising demand for products. Miscellaneous manufacturing labor, both skilled and unskilled, remain difficult to find qualified individuals. Continuing expertise expedite shipping through Vancouver due to ongoing port delays. Machinery there. So we have some things going on here, and the index is at a glance. New orders at 53.5 as opposed to 51.8 in March. Production at 56 as opposed to 53. Employment at 48.3 as opposed to 50 in March. So April was a slower month. Inventories at 49.5 as opposed to 51.5 there. Consumer inventories at 44 and 45.5 in March. Prices at 45.5 as at 40.5, as to 39 there, and backlog orders at 49.5 as and 49.5 2 months. Exports at 51.5. More exports and at 47.5 was in March. Imports at 54 and it was 52. So overall, the economy is growing, and the manufacturing sector is growing. So this does it for them. Let's head on to the Department of the Bureau of Economic Analysis. The gross domestic product, the value of goods and services in the fourth quarter, increased to 2.2%. That was a release that they gave the Bureau's first quarter advanced estimate there. Let me just quickly cut because of time. The annual, well, we won't get into that. The index for gross domestic purchases, which measures the price by U.S. residents, decreased by 1.5% in Q1, compared with a decrease of 0.10% in Q4. Thus, increased at 3% compared with 0.7% there. Real personal consumption expenditures increased at 1 here, make sure much 1.